Morning, mate.
How we doing?
Yeah, excellent. Very good.
Yeah, I did respond to your message earlier on, but yeah, I'm just stuck in the office at the moment. It's a bit of a pain.
Yeah, saw that. All good. Thank you. I was just checking.
Yeah, yeah,
Alrighty, you guys hear the music?
yeah,
Yeah,
yeah.
well,
Sweet as. Cool. Alrighty, man. Got big news today. So let's just run down. This is recorded, so I'll work out where I'm going to put the list. Actually, can you guys just talk for me?
yeah, can you hear me
Yeah.
now?
What do you need? Just a level, is it?
Sweet. Yeah, I had it. I think I had it. It was set wrong yesterday, so it was only picking up my voice, not the Zoom. But I was having issues. So the whole crux of the story is like I was trying to record these because there've been some amazing trades that would be good to like for people that missed the stream or just missed what I was talking about and why I took it, so that you can look over it. But the issue was when I've got music playing, it always gets like copyrighted from YouTube. So then what I have to do is I'd have to record it through Zoom and then store it somewhere. But when you do like a 2 hour stream, it's a huge file, so you just lack where to store it. So now this is the solution: is that I've got it routed so that the music, you guys can hear the music, I can hear the music, but Zoom can't, YouTube can't hear the music. But so yeah, and then what I can do is I can stream it up to YouTube in a like an unlisted playlist where I can give you guys the link. Now the thing is when Maddie wakes up and then she comes in, and Sarah puts the TV on for her to watch a little bit to keep her quiet while she's been fed and stuff. Is that I got copyrighted yesterday for Mary Had a Little Lamb, and I had copyrighted for Wind Up the Bobbin. It never ends. Anyway, so yesterday, kind of didn't really go anywhere. We're stuck in this area, and this is the kind of the danger with yesterday is we've got some big news this week, and we had news on Wednesday. We had Canadian interest rates, we had some JOLTS job openings, we had some ISM manufacturing. That was on Tuesday. Sorry, the PMI on Tuesday. Then we had on Thursday we had ADP non-farm employment change, unemployment claims, ISM services PMI, and then today the huge one that everyone's waiting for is the non-farm payroll that's going to come out. Now, we've also now officially had the buyback window closed for stocks. So corporates can't buy back their stocks to artificially keep their stock price high. Now we're lacking a big buyer. September we were forecasting was going to be a choppy month, and it didn't disappoint, but it disappointed early because it came out way too quickly and just sank, and then we've just been going sideways for the last couple of days. Now we're already done like pretty big weekly candle. We're already like engulfed the previous candle. The monthly candle is looking like a pretty decent size already, and we're only in the first week. Haven't like filled this wick or anything, but the body of it's like fairly sizable. The whole question is whether they're going to cut rates by 0.5%, or they're going to cut rates by 0.25%. They're pretty locked into cutting. I think they're going to price in a 0.5% rate cut, and then Powell's going to only cut by 0.25%. But let's see. Let's see if the data comes out, because we had a fairly disappointing employment number on Thursday here. And then Friday, if we get like a pretty low number, tied in with next week's CPI, which is very likely to come out very low, and the year on year come down quite substantially, they could really start pushing for like a 0.5% rate cut. So we could see the market really maybe rally from that, and then disappoint when it only cuts by 0.25%. The Fed meetings is the following week on the 18th. I'll show you the idea I had yesterday and what I was thinking. So yesterday, a bit disappointing how price just shot up from this level. Basically no indication, just hit this level and then just rallied from there. I wanted to see this level taken, swept, but we pushed up, had to be really, really patient, wait, and then eventually we took a sell, price came up and then eventually started pushing down, moved down about 50 odd pips, and then it came back up, and then it was bullish again the rest of the day. There was a level I really liked, these black lines. Really like these levels to see if we can get a bit of a sweep. That level was coming from above the New York high, above this daily level, and inside of this area, which I thought they would defend. The area of liquidity that's a lot nicer above this is this one here. This looks freaking amazing. So I really would love to see this. I'd love to see reactions at this level. Just when it does that is a little bit tricky, but this here was structure nonetheless. If we look at it on the 15-minute, it looks really nice. So just a nice little area where price pushed into it, came down, reacted, came down, sat on this level again, a couple little rejection wicks, and then it pushed down from here. So I really like this level, and that was the whole premise of having a sell position up in this area for New York to sweep into. I wasn't really watching this at all though, so almost even forgot about this trade. That when I looked at it, I'm like, oh, wait a second, I'm in a trade. And it hit nicely, real conservative target. My focus yesterday was on NAS after the session had ended, and had some absolute beauties on this. We didn't really go anywhere, but had to wait for the news to come out as well. So what I was looking at wasn't in any position on NAS, and then at 1:15 I was actually, some reason I just made a boo-boo, and I was actually waiting for 1:30 for the news, and I was it got to about 1:15. I was having lunch and I thought, I better look at the market, and I saw we had made a big spike down on the 5-minute candles here. This was the ADP unemployment that came out, this candle, 115. When I say a news event comes out, do you think, have you guys recall me saying that there's always two narratives that the market looks at?
Not really.
So there's always two ways of looking at this number. There's one way where you look at it in the sense of what it means for the state of the economy. That's the first narrative. And the second narrative is what it means for future policy. And we're never sure how the market's going to react to that. Does that make sense when I say that?
Yeah.
So the market can read this and be like, oh, look at that, a really low number. So the state of the economy is weakening. Less people there's less jobs being created. That's potentially less people that are going to have jobs to spend money. There's going to be less taxes. There's going to be less, a lot of things. So that's not really good for like business. So that could lead to a reduction in the stock market because of a bad number. But now we look at that in the sense of what does that signal to the Fed? We signal that that's a low number. The economy's weakening. The employment sector is going to need a boost. Powell's going to have to cut rates. Cutting rates is going to lead to more cheaper for businesses to get loans. Businesses cheaper to get loans is going to stimulate the economy. The economy is going to be able to create just be under lessen the restrictive stance that they're under. And if the market's forward looking, that would boost the stock market. See how there's really two angles you could look at that number? One's bullish and one's bearish.
Yeah, makes sense.
Yeah, so we just need to understand which one it is, because it can be really tricky if we think, oh, look at that, a low number. That's what impact are they going to have on the market? Do they see that as bad for the economy, or do they see that as means the Fed's going to be dovish and have to cut rates to stimulate the economy? So if you don't know, it's like I don't know a lot of the time what it's going to do. Is what I need to. Sometimes you can get a real good sense of what it's going to do, but if you don't know, you just got to wait and watch. So what happened was the market went down, shot down. Didn't really see like much in the way of liquidity. Just that we got like some rejection wicks and like around these lows, but then the market recovered from that and then pushed back up. And if the market really took it as a bad sign, it shouldn't just end here. Especially like 5, 10, 15, 20 minutes later, you really think you'd get that continuation. So what I was thinking then was, yeah, the market took it as a bad sign, as an excuse to do a liquidity grab. And if we can get like a positive ISM services PMI number to come out, the market would really take this. Now that they've got their liquidity, I thought the market could take this as a really good sign that Powell's going to cut rates, and maybe more aggressively. So I thought that they'd probably price in a more aggressive rate cut with that poor number. So I positioned myself into a buy at this point. Just after like 1:30, I knew I had like 30 minutes to go before NYSE was going to open. But I thought it was a good chance for me to get into a buy here, because a lot of the time, not every day, but a lot of the days for NAS, New York session will take out the high and the low of the London session. At least if it had pushed down, there's a good chance that New York will at least take out these highs before pushing down. If I'm wrong, I'm wrong. But if I'm right, there's a lot more upside here than there is for downside. Now, where do I think, if price is going to break above these zones, where do I see liquidity to the left-hand side? Obviously, we got liquidity right here in yesterday's day, but I really like the area above price, which was this zone, this untapped zone right here. So to me, this was an amazing target that we could push price to. If we get some real bullishness and we take out the high and we're going to keep on going, I'd imagine that we can continue even higher. So that was the mindset I had going into this trade. To help boost that, I wanted to see NYSE push bullish, and then if we can get an ISM services PMI to come out above 50, above expectations, then I'd really think that's showing that the economy, or the stock market and economy, two different beasts. But if I see a good services PMI, the stock market would be, look, the service sector is well and truly still growing. And that's 80% of the US economy. The manufacturing side of things on Tuesday, whilst the US produces a lot of goods, it's more services that they produce, which makes up the economy. So when I took a couple goes at getting in, I was a bit aggressive with just in case it was downside and if I was wrong. So when I got into a couple of these buys, price was pushing nicely, and it came back and stopped me out a couple of times inside this little area on like the 1 minute. Like it would get up about 20 pips, I move my stop to break even, get stopped out, get in again. Price would come back a little bit, got in again. So it took me about 2 goes in the space of this like 25, 30 minute period to get a trade that I was pretty happy with. Then eventually just I survived this pullback. Thought I was going to get stopped out because my last entry was around here. And then NYC came in and it just went boom, straight up. Amazing move. Absolutely amazing move. 100 pips, just like that. That one I didn't have time to move anything. It just cashed out because that's where my first take profit was. Then I waited for the news for a bit more. Okay, just here is when ISM manufacturing is about to come out. So as it was pushing up here so much above all these highs, do you think it's just going to turn around at this level? Could have reactions at this level, but most likely we're going for this liquidity up here. So took a little bit of a risky position to get in the trade just before the news, and I'd be able to cut that smaller position. I'd be able to cut it if the services came out poor. Services came out excellent. Price pushed up. Okay, so came in good, came in above expectations. Nothing like crazy good, but definitely didn't come in bad.
Thank you. Oh.
Price pushed up really nicely. Really thought now the target was going to be this green area. So scaled in a little bit as it was pushing. Price pulled back on me pretty much straight away. Really confident though that we hadn't hit the target. The target was inside these green areas. So I added another position. And then as price was pushing, when it was breaking above these guys, I added another position. But the last position was just for like a 40 pips target. So I added a lot. Like as I got more confirmation of everything going, but the only way I could have done this was because my narrative was that they did a liquidity grab with this poor numbers, and then today, and then the services came in good to support that. Really wanted to execute sells and actually pushed the button on my phone to hit sell after everything had closed out, and I thought, it didn't. I hit the side of the button, so it didn't actually trigger. And then I thought, just don't be a dickhead. Just you've had it's really thrilling getting that. Didn't want to go from buys into sells, but then I just saw it just immediately drop off, and I was like, but it's all good. You're just kind of nervous when you hit the side of the button, and then you're like, did I hit it? Did I not? Am I in poor reception? Anyway, that was the state of yesterday. Then it was just pretty choppy since then. So I hope that made sense in terms of like why I took the trade and sort of how I was reading the news. ADP, non-farm employment change, that's a low number, 99k. Even their forecast is getting pretty low. They have had lower. They had lower last year, but it's the lowest number in quite some time. Now, ADP, non-farm employment, the difference between NFP today is that this one is from the automatic data processing. So this is like where they automatically process like people's pay and things like that. So arguably it's a more accurate number because it's not like a survey. It's them actually processing payments, so they can sort of see the receipts and like how many new jobs were created. The difference between this one, so this different place, the different source, or ADP, automatic data processing, and then you've got today's one, which is from the Bureau of Labor Statistics. So this one here is when they actually just call businesses, like call all the major companies, and then say how many people have you got working this month, and then they jot that down, and then they have a look at how many were working last month, and if the number's gone up, then they've added jobs. But they don't actually look at the quality of the jobs. Then they call up another company, like they call up Walmart. How many jobs have you got created? but they don't take into consideration if the same person has picked up multiple jobs. So it's like it's not very. There's a lot of flaws in it, but it's not really accurate. There's another one that's a household survey where they'll call up people and say, "Are you working full time, part time, not working?" That's arguably more accurate, but it's also again a sample size. And we saw a couple of weeks ago that they did a revision of the jobs, and they realized they'd overestimated by 800,000.
Oh, you two, get off.
So whatever the number is, we know there's inconsistencies with how it's reported, but we can't sit there and argue about the inconsistencies. All they care about is the number that actually comes out, whether it's right or wrong. It's all about what this number is. So they're forecasting actually like pretty low numbers. It's like you can see the trend has we've had a little bit of seasonal growth where they expected more numbers getting put on ahead of the summer holidays, and now the summer's winding down. We're seeing those expectations dialed back, and you can see like the revisions. There's a revision every month, and pretty much we're almost most of the time we're revising down. So whatever the expectations were, most of the time they're revised down. Sometimes it revises up, but most of the time it revises down. So it'd be interesting to see if we get a pretty poor number and then even last month's number revised down or revised up. So I wouldn't trade the news actually when the news comes out, because it can be a lottery. But have a look, and if you are going to trade around this time, it's going to be highly volatile. I really recommend not having a trade on during that time, because it can just be absolutely wild movement. But what all eyes are on is whether this unemployment potentially could tick down. So, and they're expecting it to tick down from the previous, because that was a bit hurricane affected. And there's all question marks around like illegal immigrants, but that have been getting called and asked if they're working. So that's a theory. That's why the unemployment rate ticking up, but unemployment's still pretty low. It's whether the employment change is continuing to drop, and if it starts to deteriorate rapidly, expect them to see a price cut of a rate cut talk of 0.5%, which can lead to stock market bulls. But I still think ultimately there's a good chance that this we continue pushing down a little bit. But who knows where we end up? I'm just trying to work out where we end up before the news. Alrighty, so it's a big spiel from me. We're kind of stuck in this range still for German. Before I give my thoughts, what do you guys reckon?
I'm probably inclined to think bearish, but like you said, it's just stuck in this range.
Mm-hmm.
I don't think it's going to do much. I think we're going to get whipped about till this afternoon.
Mm-hmm.
I'm sort of looking at there's some sort of levels just below where we are. It sort of drops down, sweeps that, and then heads back up. That's my sort of plan for the day.
Mm-hmm.
Dog, stop it! Stop.
Yeah, I've been hanging out for this level to be hit for a while now. The bottom of this green one, because that level is here on the 4 hour. You can see like this consolidation. This is what's holding price up at the moment. We've had two goes at it now. We had to go on it on was that Tuesday? Wednesday. So I had to go at it Wednesday. We had to go at it on Thursday. We've had to go at it, not quite a go at it this morning. We've had two goes at it, and normally I'd say that this potentially is going to be held, but we look at the hour, and on the hour it actually closed inside of it, so we reacted a bit lower. So I'm really suspicious about everything below here. I'm really suspicious that this is where people could be piling their stop losses. all in this zone. So I'd really like to see a sweep of this. Whether we need to go up to again sweep down, or we can just sweep down in the open and eventually take this. And I'd really like to see it take the low here and just complete that job and take this Asian liquidity that's here. This one. So we bounce off the top of it. Now if we can start breaking down, I think we've cracked the top of that nut. And if we can break into that nut, we should be able to go take the low of Asia and then sweep into these ones. So I still want to hang on to that bearish bias. As in, like, I'm still bullish on the stock market, but I reckon we're going to get a correction just because the stock buyback is over at the moment until the new quarter comes in. And I'd really like to see this area of liquidity swept before any potential bounces. I really find looking for buys from here without sweeping all this liquidity, it can happen, but I find it, I just don't feel right. So let's see. So 5 minutes before the open, we had that typhoon, that hold to trading. So Hong Kong was pretty quiet. German industrial production. What was that?
Right, oh yeah. Dave, I sent you a friend request on Discord just so I can ding you some details about that gig in March, but I don't think you've seen it.
Oh,
Either that or you're blanking me.
no, I didn't hear anything. Maybe it's into a different day. I'm going back.
I can send it to Goldax, but
What's your name?
I'll send it again, mate.
Okay. I do have a lot of groupies constantly, trying to contact me, so I have to be careful.
You're a popular man. Let's got some news at 10 o'clock as well. Some Eurozone GDP. And we've got an ECB speaker at 8.
What's your Discord name then?
I think it's just Jay, isn't it?
Yeah.
Can't find you. You don't exist.
Hang on.
Quick diagnosis. No, you're gone.
Whoever you are, you know who you say you are.
Yeah. Can't exist.
It says it's sent you a request, but
Check in. Yeah, there's this different section where it's go to direct messages, and there should be message requests. Dave.
Yeah. Are you Jay Remarkable Chipmunk?
Yes, that's him.
Yep.
All right, 3 minutes.
I've just tried to befriend you as well. We're both trying to befriend each other.
yeah, right.
2 friend requests cancel each other.
Same time, damn it.
Perfect, sorted.
Awesome.
So we've had explosions out the box for the last couple of days. are we going to just shoot straight down? The last couple of times we've gone straight up. We've
yeah,
pushed
I mean,
down beforehand.
I was all over the place when I got home. I said to my son, listen, I'm going to go to sleep for half an hour.
And yesterday we saw the little consolidation in the Eurozone actually bounce. I'll talk about that one in a second, because we've got 1 minute now before they open. All right. Here we go. Big red candle, come on. Just took the euro low. Had a little reaction. At least take the Asia low. I'm going to jump in for a sell. Don't know where I'm going to put my stop loss, so it's low risk at the moment. But I'd like to see, I'll have to see what it does above here. But I'm thinking that this will probably hold. I want to see price take this low and then at least push down. Okay, come on. Just break this low and then downtown. Because we've had a lot of power straight up the last couple of days. It doesn't look like we're really pushing up that strongly. So it would make sense to grab liquidity. And if we can take the liquidity from, we've had a little reaction from the euro low. If we can now take the liquidity from this Asia low, it would be really nice. Come on. You can do it. Okay, last 2 minutes of this 5-minute candle. Hopefully the last 2 minutes brings the power.
Hello, hello.
Hey, Tom.
How you going?
Good, mate. How are you?
Good.
Happy Friday.
Yeah. It's kind of a mixed blessing. It's like weekend's here, but it's the last day of trading.
Hey, did you get your roast for Father's Day?
Yep.
Very good.
I had some leftovers for lunch today. It's beautiful.
Oh, nice one.
Yeah. Yeah, yeah, it was just a good day. How was your Father's Day, mate?
Well, it's a different day here for the UK one. So Sarah gave me a mug on that day. So I tried to swing a second Father's Day, but she wouldn't have a bar of it.
You should be like, I'm Australian. It's basically a religion.
Yeah,
Australian Father's Day.
I know. I tried to do something for the Australian Mother's Day, and she's like, "What are you doing?" I was like, "Come on, let's go for lunch." And she's like, "I don't want to go anywhere." I'm like, "It's Mother's Day." She's like, "No, it's not. You missed you missed Mother's Day. Mother's Day was last week in Portugal." Like, oh,
Yeah. Jeez.
yeah,
You're not going to win that one, Aiden.
yeah. I was like, I thought it was today.
Yeah, good try.
All right, profit taken, boys and girls. It's just boys today. Oh no, Sarah's here. Annie's not here. Sweet. Very good. Nice and pretty simple analysis today.
I arrived too late.
See if we can finish the job now. And I mean, I've been hanging out for this level for so long. I love it. Love my stretch target to get hit. But I don't want any. That was the bulk of what I wanted. And now the runner's now just going to open the target up for the runner, and hopefully we can break through here and we can get to my stretch target.
Did you get in on the bell?
A little bit after.
It's like, yeah.
Yeah, I was watching because the last few sessions, what we'd seen was like some decent movement just before, and that's why I was wondering, like, if they're going to really explode. I've seen they've been doing that little, like, the actual London Open on the bell has just been an explosion, but there's been a bit of movement in the minutes beforehand. Mm-hmm. On that day and then this day. See how like kind of shot straight down and then pushed up. And then the day before it moved down. Like I remember watching this. Remember this day where it just like went down in the minute beforehand and then just exploded up. Mm-hmm. So I was just watching carefully to make sure that it wasn't going to run down very quickly before the bell, and it didn't. It moved down the final minute, but it didn't move down much. Like this candle here is all of 15 pips. Then it hung here, and it didn't have that explosion up. So I was like, yeah, sweet, now can just wait, and if it's hanging in here, not exploding up, it makes sense that it should drop down for more liquidity. It took the little euro low, had a little reaction from that, and that was when it gave the sell entry. So no real like candle confirming. Actually, now that we look on the 1 minute, not that I was looking at the 1 minute, but we did have a HCS, didn't we?
Yeah, there was.
Right there.
Yep.
What I wanted to point out as well was, I've got sales up here. What I wanted to point out is what it did the last couple of days with where we opened and we consolidated it inside of here. This is something that I just noticed after the fact, but it consolidated here, and that consolidation was when London exploded up out of this zone, it held it as a support, and then later on we think that this area has got a fair bit of liquidity in CDV because this is the Frankfurt Open. After it pushed up to that nicer area for those sells, price came down and scrubbed that zone completely, and then had that reaction from there again. So it's really interesting that Eurozone actually set some liquidity, and London came back and retested it, and then New York came and finished the job. I thought that was really interesting. Kind of did it the day before as well. What was that? Sorry.
Can you go to the 4 hour, Hayden, please?
At this point?
Yes.
See you, Justin. Here's the 4 hour.
Guys, stop. Stop. Good.
Oh, no, sorry. Can you go to 30 minute? My bad.
30 minute, yep.
That's the last area of liquidity for this bullish candle, and it had exactly off it.
Oh, yeah. Last area of liquidity.
I actually took that trade from the top there, and I was aiming for this down the bottom here that you had.
Yeah.
And I was blindsided by I had it in my head that it was going to go down here, and it just stopped and reversed. I couldn't get my head around it. Why it had reversed from here, and I worked on it, and finally, it's just I should have closed that, taken my profits there, and gone long. It was blatantly obvious.
Yeah.
Especially go down to the time frames, you can see there's rejection candles to go long.
Yeah, same thing. I executed on the sells in here, and I took some profits, but the runner it came back on me. I left a lot of profits on the table, a lot of cash on the table there, because I was hoping it was going to get down to here as well. So a bit of a shame, didn't execute that well at this point, but good point about last area liquidity. The day before as well, again, we look at this little zone. I guess you'd say the same thing here as well, that this is that zone, and price, once it broke through in London, it came back and it retested it. So if the Eurozone, when it's sort of set in that liquidity, I'm thinking that at some stage as well, we're most likely, I want to see it really come down and take these, finish the job, but at some stage, I'm sure New York or maybe late London, we'll revisit this zone. Hell yeah, look at this, go. So I'll treat this as
a reaction off that. Sorry.
No, you go, mate.
I was just going to say, I had a reaction off that 30-minute imbalance from Wednesday, and then it's just dropping. It looks like it might. The only other MMG I've got is from 21st of August, which is below where we are now.
Oh yeah, no, I want to see it.
I
should take this now. Hit my stretch target and far out, man. We'd hopefully done in 15 minutes.
Bloody good day. Wish I'd been here a bit earlier.
Yeah. What do you got? You got another month and a bit, and then daylight savings ends over here.
Yep.
Then that will be a bit later.
Yep. It's harder to get to New York session though when that happens.
Yeah. Oh, come on.
Double-edged sword. It's going great.
Yes. Wow.
Sweet.
Cowboy long.
Might keep going through that MMG.
Where's MMG at?
It's the middle of it's 18,414.
18,414 all the way down here.
Yep. And it's 435 is the top of it, which looks like it hasn't quite touched, bounced off it. So.
Oh yeah. Wow.
Beautiful. Here we go. Sheesh. It's 100 pips in 15 minutes.
Yeah, man.
Pretty good.
What a start.
Just going to get a drink.
Okay. Do you guys take this?
No.
Yeah, I'm holding it.
You in it? Sweet.
87 pips.
You didn't pull the trigger, Sarah?
No.
How come?
I had a dog sitting licking me, was putting me off.
Oh, bloody dog. Nala. Was it Nala?
Gee, it was like, what is going on?
Was it Nala?
Sorry?
Was it Nala?
Yeah, the baby, yeah.
Yeah, I tried to take it Hayden, but the bloody magic keys wouldn't work. Worked on every other pair on the chart, but it wouldn't work on the bloody German 40. But I got a trade on the NAS. Yeah, I could get in on the NAS, so I just took the NAS and I got 2 for 1 there, so I'm happy with that anyway.
Yeah, fair.
I really wanted the German 40. I could see that setting up really well.
Oh, look at this. Go now.
That's the MMJ.
Oh, yep.
Oh man.
$120, is it? 140. 140 pips.
I don't have any MMGs below that. So no, if it's going to keep pushing low, I have no idea what's down there.
It's a good zone for a reaction right now.
Yeah, I've got a zone there where we're in now.
I think it's going to push.
It bounced off my line. I think this must be a 4-hour or a daily. That's a daily level.
What have we got coming out this month? We've got potentially Fed lowering interest rates, haven't we?
Mm-hmm. Yes, sir. Next
I think
Wednesday.
this is,
We've got CPI next Wednesday, and then the Fed the following Wednesday.
Do you think they're bringing price down, anticipating a lowering of rates so that they can push things up again?
Potentially. Yeah, potentially. They got some, like, the data wasn't good yesterday from the employment side of things, so they could be setting up for some good price points. But the pressure's to the downside at the moment, and I think what's driving most of this is the fact that stock buybacks have closed now, so they've just lost a big buyer in the market.
So stock buybacks are closed, so that they only have a period they can do it in America. Is that what you're saying?
Yeah, there's a window.
In Australia, you just have to announce that you're doing it, don't you? Or is there also a period?
I'm not sure for Australia. The reason they do that is so that when it comes up to earnings season, because it's they're going to start rolling off Q3 earnings. I know it almost blends in. By the time that they've all done it, that almost starts the next cycle. So to stop the manipulation of price ahead of the earnings, they close it so you can't like, otherwise they could buy back a lot of shares and then see the price of the share, and it'll lead to optimism. It's amazing when they come out. There's a correlation with one of these University of Michigan sentiments or like sentiment surveys that come out. So where was it? It must be the Friday before. Like these ones, University of Michigan Consumer Sentiment. Some of these can move the market, and there's a huge correlation. When the stock market is actually rallying, the sentiment's up. When the stock market's coming down, the sentiment's down. Because people look at like how they feel is determined on how their investments are going.
Is that a survey?
Survey, yeah. survey. Yeah. So to try avoid some like manipulation is that they announce when they're going to do like stock buybacks, but then they can't do it close to like when they start to report the earnings.
The corporate strategy, I think it's a great idea. You can buy your own shares off the market.
Oh yeah. Yeah, I mean all of these things, like I used to get so angry at the market because like it'd do stuff that's like I just wouldn't think is fair or logical or that kind of stuff. It's amazing that all these things that are
I can identify with that, mate.
yeah, it's a game. It really is a game, and you've got to learn how to play the game. Like when they complain about, because I hear all the time, every time it comes down to NFP, there's all complaints about the numbers are wrong. The numbers are wrong. How they're not accurate. There should be a better model to do the non-farm employment. But it's a flawed system. But that's the beauty of it, is that we know it's flawed. So you have all these like they must. Why would they change it? Because how loud are the bears in the on like YouTube and like economists? Like you look at Mark Faber, and I had to turn this guy off.
Mm-hmm. Thought you were going to say Danielle Ramon.
Oh, Danielle DiMartino. She's a constant bear, but she has like some good things. But thought for money.
Oh yeah.
This guy, and you listen to him, and you'd think that you should just sell up everything, go live under a rock, or go to the top of a mountain, and never come out again. Then not just him, is it Harry? Is it Harry Dent? Who's the other guy that like hates Bitcoin, hates stocks, thinks everything's going to crash 80%?
Oh yeah, who is it? I don't listen to Harry Dent anymore. Man.
Yeah, who is it?
Schiff? Is it
Peter Schiff? Yeah. Him as well.
I've got one of his books right behind me.
Yeah, bloody
I
hell.
don't listen to him either anymore.
So I really like listening to the bulls, the stock market bulls, because you listen to them, and like most of the time, like I quite like these two. I really like Adam Taggart. I really like Lance Roberts, because he's a bear, but he's like, it's not how the stock market works. So he's like, do you want to sound smart or do you want to make money? Because if you want to sound smart, just get stats and then say the world's going to crumble. If you want to make money, then just play the game. I don't care how it goes. And most of these guys never get out of the market. They're just always in the market, because time in the market is what makes you money. But trying to time the market is what's really difficult. As scalpers, we can try time the market. But not being invested in the market is one sure way that you're going to lose money through currency debasement. So being in the market long term is going to make you money. But yeah, there are going to be terrifying drawdowns along the way, for sure.
That was a bit I struggled with when I first started trading, because I was wealth management for over 30 years, and it's the time in, not the time in.
Yeah, exactly.
So, and it's like I used to really I couldn't make it out. I was just like, what? Because I'm meant to be holding this. So I'd be buying the dip. I just didn't. I still struggle with that sometimes.
Yeah, I like Brent Johnson as well. I think he's really good, and he's all about that. You don't leave the market. You can sort of change around the margins, but when insurance is cheap, buy insurance, because you never know when you're going to need it, when there are drawdowns. And so he was invested heavily in some stuff, but then like he's all about gold as well. But then when he does, he's quite cognizant that things do get overvalued and pull back. So when price is rallying the most, that's when insurance is the cheapest. So he'll buy like some put options, so that if it did sell down, he's not getting out of his buy positions, but he's able to exercise some of those calls that he's made, and that make money on the way down as well. I think that's a really smart way of doing things. Is never get out of the market, especially. This is a bit of a tangent, but especially the way that your the capital gains and investments are taxed, you really don't really want to get out, because you get stung. You have to pay so much in capital gains, depending on obviously the current country. But like trading your like investments is a bad idea. But trading like what we do to fund those investments is all well and good. It's a different game. But like if I'm holding things for the long term, I'm just buying and holding. But when I'm trading, of course, I'm here to make money on this, so I can fund those investments. So in this case, I don't care if I'm buying, selling. Time in the market is critical for this, but investments is a whole different beast. And we want discrepancies. We want some vagueness around these news events. If we don't have that vagueness, then if it's all so straightforward, where would the volatility be? So why I actually appreciate it for what it is now. That it can sometimes it not make sense, and it can be bloody annoying, but we need to be able to look at numbers and have two different ideas, because that's what makes the market, is to have buyers and sellers. So I get there's issues, but we need those issues. So I appreciate why it's there now.
You know how you talk about the stuff you do with BlackRock, and time in the market and stuff like that. For the last probably 350 years, the stock market just goes up and to the right.
Yeah.
And if you buy and hold, you get some nasty pullbacks like the 87 crash. But 12 months after that, blue chip stocks had recovered almost 100% of what they lost.
Yeah.
And it just keeps going up and to the right.
Yeah. The market factors that in, because we look at even August, where we had this crash here, where it dropped so much. It was very quickly phased out, wasn't it? And we look at COVID, like ways back. Where was that? Back over here. This was COVID, and like you literally thought, there was some stage when I was listening to the media, I was like having flashbacks for, what's that movie, 48 hours later or 48 weeks later or whatever it is. I was like, what if COVID turns into like a serious like rage virus? I was like, what if that actually happened? And
I've got some S&P I'm holding in my pension right at that dip there.
Oh yeah. And you look how quickly it was actually faded out. And they say people that invested for like 40, 50 years have gone through so many bad times, and it very quickly just gets faded out, because it's not that necessarily the business is growing. It's the currency that you're holding is losing value. You're losing purchasing power through inflation. So the only way for this to really start going down is, do we think we're going to have a period of like really low inflation for a very long time? And I can't see that for a while.
The thing is with it, in all my years, I was in this from the late 80s, early 90s. So I've seen all the different cycles every 10 years, the dot-com bubble, the crashes, at the world's ending, and you get clients on the phone going, oh, my investment's gone, look, it was this the other day, and it's just like, well, are you taking the money out now? If you're not taking it out now, you just got to ride it. And actually, how much are you actually up? Oh, well, I'm still up 100 grand. You're like, okay, yeah, but I'm down 20,000 from yesterday. Like, you're not. Just wait.
Yeah.
It's just the unfortunate people who actually need to take their money when there is a crash, like they've got to retire, or somebody's died or whatever.
Yeah. Planning comes in then when you need to transition from growth to defensive.
Yeah. That's why I've gone a lot of cash at the moment, anticipating that we get a pullback before the end of the year.
Yeah, I mean, I normally do every month. I'll buy something, but I haven't bought something this month so far. I mean, we're only first week in, because I was sort of hanging out to see if we pull back deeper for this month. But regardless, I'll buy some stage this month. Just hopefully I don't buy like, high. Hopefully I can like time it to a degree. But regardless, I'll still buy something this month.
Yeah, but you're younger and you can hold it a bit longer. So
Oh yeah, for sure.
Yeah.
Yeah,
I'm going to use mine for property, so I need to keep it cash.
yeah, if you need it in the next potentially need it in the next 2 to 5 years, then invest in it's not a good idea, or put in all of it to work. Hey, Ive. Yeah, that's why at the moment.
Actually, I should rephrase that. I don't need it. I want to use it for cash, for property.
Yeah, because we're saving for we want to do some renovations. So at the moment, I don't really want to. I've been trading the prop accounts a lot more in the last few months, just so I can actually. I don't like my personal account. I don't want to have too much in there that I'm using to put to work. So I'm keeping cash aside because I'm making really good interest rates at the moment. And because the prop accounts, very, very little cash needed in the whole scheme of things to actually go for the prop accounts, as long as they keep on paying. But I can always, whatever's in my savings accounts that's not put to work, can always easily put that into put it back into the personal account, the trade. At the moment, I just kind of got the pro account, so I can utilize really good leverage with very little in it. So it makes sense to do that rather than keep 100K of actual money in a live account. I'm better off putting that 100K into a bank that's going to give me 5% and know how much you got there, and then utilize the prop space.
Yeah, what I've done is I've set my pension up into what is called a SAS, so you can actually use the money to buy property, only commercial property, yeah. But you can also loan back 50% of the value. So in effect, you can get 150% of your pension, and the 50% that you can take back, you can use to do whatever your business is set up to do, or you can invest it into other businesses. So you could take the money out and trade it.
Oh, yeah.
Or you could go and buy a residential property and flip it.
Yeah, I haven't looked into that SAS.
SAS, yeah.
Is anyone trade free at the moment?
I've taken a long on NAS here.
Trade free. You mean zero, no positions? Is that what you mean?
Yeah.
I've got no positions. Yep.
So I don't have any currently. The sells have completely played out. I didn't have this zone until Tom was pointed out that was the MMG, but we can, when we zoom out and we have a look at this zone, we've got plenty of little areas here. We've got swept the New York and Asia low. We've got lovely wick rejection area around here. We've got Asia low. We've got a New York high. We've got consolidation around here. So I quite like that. Now underneath here, this is the next zone where we've got a good amount of liquidity. So if we are breaking down below here, then of course we'll go down to the next zone. But if we can hold above here, because we've moved down already quite some way, we've already exceeded a typical, on an average day, the London range, which is 120 pips. So we've made 140. We've got clean candles above price, and we've got some liquidity sitting here. Now, I don't want to jump in for buys just yet, that's for sure, because the momentum's to the downside. But if we're failing to make new lows and we're actually starting to have some bullish price action and we're starting to get back up into these clean candles, I wouldn't be surprised to see full recovery, at least to retest this euro liquidity zone, because really we haven't even tapped into it. So we can be getting some really good buy prices from around here, especially if NFP comes out and they're quite low and they then price in rate cuts, like higher than expected rate cuts, as in the 50 basis point rate cuts. I think when they do cut rates, they'll be a bit disappointed, though, in terms of hoping it goes over a 50 basis point, but it comes out with a 25 basis point. So
Yep.
that could very much lead to one more rally and then a drop. And then you will hear the same people come out and be like, they've over tightened for too long. We're going into recession. The world is doomed. Cash out of everything.
Come back to your YouTube page there.
Mm-hmm.
If you just click on your tab there, that second guy there,
Lacey
under
Hunt.
your, yeah.
He's
I reckon
good.
he's brilliant.
Yeah, he's a good guy.
Yeah.
I like listening
I
to
think
him.
he's like the Gandalf of the markets. Like he's got this, sort of understanding of the markets that just, it's like to the 9th level or something.
Well, he used
Way
to
too
work
much
at the
stuff.
Fed.
Mm.
It wasn't he. Was he the Texas Fed, Houston Fed?
That's how I got onto DiMartino Booth. So I listened to her interview him, and I was just like, that is one of the best interviews I've ever heard. And that's how I got it, because then I got a heap of her stuff. But every time he comes up, I'll have to go and listen to this one because I don't mind Thoughtful Money. It's pretty good. But he's one of the people that I hang out to listen to.
Maybe it didn't.
There's a link to Bloomberg there. That might tell you your biography in Bloomberg.
Yeah, here we go. This is him.
Yep.
So
Federal Reserve Bank of Dallas. There you go.
yeah, senior economist for the Federal Reserve Bank of Dallas.
Yep.
So he definitely knows both sides. He understands investments and he understands how the Fed think.
Yep.
So yeah, he's really good to listen to. You know what I find really funny as a person as well is I think it's Jim Roberts. Is it Jim Roberts? No. It's Jim something.
Jim Brand.
Nah. I thought it was Jim.
He's doing well. This guy that runs this channel.
Yeah, he's killing it.
I enjoyed I think he was on Gold and Silver, whatever it was.
Oh yeah.
And he moved from there and he set up this. It's great. It's a great channel.
Jim Rogers, that's it.
Jim Rogers. That's it.
Yeah, this guy. This guy's funny as. You gotta listen to him.
Yeah.
He's he was on Market Wizards. And they ask him and go like, where do you think you should be putting money? And you go, well, I don't know. If you know, you should send me an email before you tell anyone else. If you think there's a good place from all your interviews, you tell me.
Yeah. He's quite sprightly, isn't he?
Yeah. That's a good word for him, actually. Sprightly for an old guy now. He's he's quite. he's got a good sense of humor.
Yeah, I'll have to catch up on a few of those. It's funny how the algorithm feeds you stuff that's like you might take a break from a channel for a while and then it just stops presenting that stuff to you.
Yeah.
Like sometimes you can hear certain people only a few times and then you just go, I've just got to take a break from this.
Yeah, I get
Come
every
back.
end of every day. Like when I have my own time, I'm like listening to music. I'll watch like some UFC stuff. I'll listen to interviews here. By the time we finish, like before I get to that though, I've got all. It was here before, but you'll see like. Hello. You'll see like Hoggy and Coco Melon and stuff.
Yeah.
Yeah, we're like, oh, and then I get rid of it finally because it starts playing the stuff that I'm listening to.
My friend's little daughter, I was like looking at my Amazon account. I was like, Coco Melon. All my kids are like, my youngest can drive this month, and I'm like, Coco Melon. None of my kids are gonna. Anyway, we had them over for a barbecue, and we'd given her the channel changer to go and put what she wanted on. So she's gone click, click, click. So I'm looking on my account, and I've gone Coco Melon, Amazon. She's done it on the Prime on the TV.
Yeah.
Oh yeah.
Yeah.
So I've got a subscription for Coco Melon.
I thought you were going to say it heard Maddie in the background while you're doing these streams. And
Who's my Maddie? Yeah, no.
But I started getting dog adverts when the new neighbours moved in next door, and I had this dog that it still barks continuously, but YouTube's worked out I don't actually own a dog. Yeah, I started getting pet food and.
Oh my god.
So I'm glad Sarah mutes her dogs.
Yeah.
Yeah.
Yeah, that's scary. I was talking, and I was with Sarah, and we're literally just talking about airlines, and then the next thing that came up was an ad was Fly Etihad from London to Sydney. I was like,
scary, isn't that?
Yeah, bloody things listening to us.
I actually say to my kids when I'm having a conversation, turn your phone off now.
Oh yeah.
Switch it off. I need to talk to you.
Yep. So that's not just for their attention; it's actually so that it's not listening to. Is that what you're saying?
Yeah. So it's not listened to. But the thing is, if you've got an Alexa or Google or whatever.
Yeah, they listen.
Oh, it's incredible. Or even just a smart TV is probably listened to.
Yeah.
There we go. Now I'm going to get dog ads.
Yeah. Sorry.
All right, we've done nothing for the last while here now. We've had some fun. 3, 6, 9, 12, 15 minutes. And then it's we're just tracking sideways.
So, nice barcode there.
Yeah, isn't it? Are you in these cells, Paul?
I took them with you, yeah. Yeah, I got out when it hit the green zone. I got in again. I thought I'm getting in again. So I took 2 nice wins.
Good work, mate. Were you holding
risky,
some from up
risky,
here?
But say again?
Were you still holding some from up here?
No. I actually got into a long in euro because of the 4-hour and daily price action. I thought maybe we'd go up initially, but I cut it. I didn't like what was going on.
Mm-hmm.
But I wanted to climb into long at the bottom of Asia. The spreads are so bad on German and Asia session.
With Pepperstone, yeah.
It's terrible. It's 7 or 8 or something. You're giving up 16 pips just to execute.
Yeah, some of the prop accounts, though, have good spreads.
Yeah, just talking about the YouTube ads and everything. Victoria gets the shits of me. She keeps getting these. I don't use that Alexa or Siri or any of that stuff, but she does, and she keeps getting these ads for Greg Secker and and Blue Guardian on her phone all the time.
Oh, you come to the pet food store adverts.
Yeah. She
doesn't even know
what she's barking at. There's obviously a bird in the garden.
You doing a study session this weekend, eh?
Yeah, tomorrow. Let's do it tomorrow. I think it was really good last week, having the week off before when I was away, and then coming back. I think it was really helpful for this week, having that study session on the Sunday. So I think we'll explore. It'll be about 9.
Well done.
I'll work out the topic. I haven't thought about the topic just yet. Potentially would have looked at market structure. I know there's been a few requests regarding that. As for where price is going to go from here, I don't want to get caught up in the momentum. So, but I'd be leaning towards buys, hey. But I don't want to get caught up with this. I find we could continue lower and we could just be eating away at this. I would actually be liking to see the timing that I would just like to see another leg lower. Really would like to see that leg lower. If we see that leg lower and then we start to see, I would actually feel much more comfortable getting in some buys from ways down here to think we could easily get that pullback. But if we start actually pushing up into these clean candles, I'd be really looking forward to New York session being able to correct a lot of this move. But I find it pretty risky to take buys right now. I mean, they're probably not as risky from here, but definitely get your risk out when you can and then hope it can push up. I wouldn't want to be holding something, just with this move down. Yeah, just get your risk out when you can, and then just see if we can break up through here. With that clean space, there's a lot of areas that it could go up to. It could be really nice. And I'd like to see this area. At some stage, this is a target. Whether it's going to be today or next week, or weeks later when the market has recovered from whatever bad news potentially can come. But this zone, we've got to treat that as a pool of liquidity, untested. And we're going to have a London high. So if we're pushing up and we're still holding good bullish structure, then you'd think that price hasn't come up all this way here for nothing. Price will, however long it's taken to get up here, could be weeks, could be months, could be a day, could be hours. But when price is pushing bullish up through here, it hasn't come here just to turn around. This is the liquidity pool that price will tap. And that's a 50 pip range. And that would be an A+ setup. But getting from here up, there's a few other variables we need to take into consideration. London volume was to the downside. Whether there's momentum that's going to continue price going down for a bit. How long it stays here. When New York comes in and New York sees where you can take liquidity from here first. Heaps of variables to try to predict it. But once price is above here, price for sure will be going to here.
Well, what is it about that little blue zone that you've drawn that you like so much about liquidity there, as opposed to there at the end of New York? I'd be looking at those wicks rather.
Like here?
No. So topside liquidity. Yeah.
When
you have more, I suppose it's German. It's the back of New York, so there's probably not a lot there.
Yeah, just because this is fresh liquidity. This is fresh liquidity that came in around the Frankfurt Open. So, price pushed down, good orders here. So this would be a liquidity pool. It doesn't look that obvious in terms of rejection wicks and resistances, etc. But for sure, this is the way that there's a lot of speed through this movement. You can see there's a lot of imbalance, and then this one did the retest and then shot down, and we've got London Open here. Is that this little fake out area, for sure, if price is pushing up, we've got clean candles all the way up now. So that's why I think from here to here is I would say that price shouldn't have any trouble getting through here. Whether price can react from here or here or here or here, it's got to get through these other areas first. So it very well could get all the way up to here, but can it get up there in one go, or does it push? Does it have pullbacks from these other areas that kind of shake you out of the trade? Not sure.
Yeah, I like the way you look at it inside those fast candles that built it up. That makes sense to me.
Yeah, when I'm quoting levels and saying like where I think price can go, it's usually like my first target. Doesn't mean that I'm not looking for it to get all the way up to here. It's just where do I think price has no trouble getting to? Because that's what
I
makes.
feel like if we got 100 pips, we're getting a bit greedy if we hold on beyond that.
Yeah, I mean, from a higher time frame, it might make a lot of sense to push all the way up there. It's just I know how the market can it goes in waves. Even yesterday's NAS trade, when I was like, I had so much confidence price was going to get up to here, but when price was pushing up, I had like knew, well, not like I had all the. I'm not gonna say I knew that it was going up here. Is I had a heck of a lot of conviction that price is going to get up here, but the danger is getting in size too big, and price might not have gone just a pullback here to go up. Who knows? Price could have gone like this to go up, and that's what I need to then consider, that where I really absolutely think price can go to, say this green zone. Do I think that this New York session, the high is not going to pose a problem? Even though I think it's going to go higher up to here, I need to understand that this high could pose a little problem. So do I want to get in for a trade thinking that I'm just blindsided that price has got clean traffic when I know price could have an issue at this point? I need to be able to use these data points so that if price comes up to some of these other like potentially more problematic zones that I really want to see price push through, such as in German, to push up to like, this is the HCS from New York, so it would make sense that this is a big pile of sellers that got in. So this represents a lovely area of liquidity that once the bulls are pushing, it makes sense for them to unload their positions here, but it might go up like this. So I need to be aware that there could be areas where there's problems, because if I can understand how there's going to be areas where there's problems, I can potentially use these as scale and opportunities on the pullbacks. But if I want to take like a clean move as well, like a fast move, then where should price have zero problems? And I would say from here to here, once we can, maybe if we push up cleanly, we could have a little problem because that's the top of that structure. There's an Asia low here, but the second break closing above here should have zero problems getting up here. Looking good, Tom. Looking really good. Hey guys, I'm gonna have to scoot. So appreciate you guys. Any questions before I leave? I think we had a really nice session.
Yeah, I think you had a clean sweep this week. Well done.
Almost clean.
So tomorrow, Hayden?
Yeah, tomorrow, mate. We'll have it at around 9 o'clock, so 4 p.m. your time.
Awesome, thank you.
All good. Thanks, mate.
Sweet.
Cheers, thank you, Hayden.
Thanks.
Cheers, guys. Have a good weekend.
Cheers.
Thanks,
See you
guys.
guys. See you guys tomorrow that are there. Otherwise, have a fantastic end of your week. Have a
What
good weekend.
time are you doing it, Hayden? Because I might be travelling in the morning.
Oh, about 9 a.m.
About 9. Okay, all right.
I'll
Thank
put
you.
in the link, the times. I'll have a little think and discussion with Sarah, but it'll be around 9ish.
Yeah, I'm going down to the coast. So I don't know what time I'm going.
Okay.
Okay.
We'll probably
Awesome.
do
See you
it on
tomorrow,
the
Hayden.
structure.
Thank you.
Sweet. All right, guys.
All right, take care, everyone.
You too. Take care, all.
Cheers, bye.
Cheers, thank you, bye.
Yeah, have a good weekend.
Thanks, mate.